In this episode, we're bringing back our CEO, Jim Small, to talk about where he sees SANTÉ evolving, current trends in the marketplace, and much more. Thank you for joining me again on the podcast, Jim.
Happy to be here. Thanks, Vanessa.
So on our last episode, we focused on explaining what ground leases were, but we never really dug into why or how SANTÉ decided to focus on them and prioritizing them. So at what point did you realize that ground leases were really a key investment vehicle for SANTÉ?
Yeah, I think there's some distinct attributes about ground leases as part of the capital stack. So if you think of buying a commercial real estate building, I'll stick with that example. And, back centuries ago, there wasn't available debt like there is today. So everyone would simply have to buy real estate with all equity. And through legal changes and technology changes, debt became available. And so you could then use leverage and you didn't have to put in as much equity. You could use debt to buy properties. And subsequently, there were other technical innovations like mezzanine financing, and equity became pref equity versus common equity. And there's always been innovations around the capital stack of real estate. And it just so happens that ground leases are one of those innovations that have been around for quite a while, but haven't really rolled out and haven't been as popular because there's been so many other types of capital available for commercial real estate. Now that commercial real estate has evolved and has matured, particularly in the United States, where there's multiple layers or multiple tranches of capital that are trying to fill up that capital stack to buy a property, it's kind of the prime time for ground leases to come about. And so when I was at a class in Boston, they did a case study on ground leases, and we looked at it and said, well, this makes a ton of sense for institutional investors because you can get returns very similar to industrial properties or multifamily properties today, but you don't take near as much risk in the operational variability. And so from both sides of the user of capital and the provider of capital, it makes a ton of sense. And so we in the middle are kind of creating that platform to bring those parties together. And that's really the success.
Thank you. So how about what was the thought, or how did we come across the decision, or you come across the decision to create a fund around the ground lease?
Yeah, I mean, it just becomes more scalable to have what I'll just change the term, maybe fund a platform where you can just continue to provide a programmatic way to deploy capital into commercial real estate for those that own the real estate and need the capital. And so to have a platform, whether it's a fund or a REIT, something like that, is really the key part, is just make it available for as many people as possible. And being programmatic, almost kind of a rinse and repeat structure, is the way that we can proliferate this opportunity out into the market and really help people get a more efficient capital structure by having lower cost capital by using ground leases.
Thanks, Jim. So what about why does SANTÉ like to play in that middle market focus?
Yeah, I think there's some really fantastic players in the large market, meaning if you're buying a ground lease for $200 million or $300 million just for a single piece of property's land, think of about a property in New York City and Manhattan that's really highly valuable and the dirt is worth hundreds of millions. That's a pretty efficient market. On the other end of the spectrum, you have land leases under fast food restaurants, under bank branches, under pharmacies, and those are really bought quite frequently by high net worth individuals like doctors, lawyers, entrepreneurs, and they may trade from 500,000 to a couple million. That's a relatively efficient market too. But where there's a ton of opportunity and a ton of benefit we can provide is in between those two endpoints. And so when you see a property that's worth, 10 million to 80 million, there's an opportunity for us to just participate in the ground of that property by turning it into a ground lease and providing more efficient capital. And that's why we're focused on the middle market at SANTÉ Realty.
Thank you. So in that middle market, how are we finding the best deals, and how do we maintain the competitive nature to actually move forward on those deals that are out there?
Yeah, we're fortunate today. There's ample capital. Not all of the capital sources are actively participating in early 2022, having seen interest rates rise so much in 2021, end of 2021, interest rates rose so much. So early in 2023, we're seeing a lot of participants there to provide the capital. At the same time, there's always people both in the United States and from abroad wanting to buy real estate in the United States. that are looking for efficient capital structures inside financing real estate. And so the market is robust. It's trillions of dollars large. And so just providing efficient capital to buyers in that middle market space, there's more than enough opportunity. We're very blessed that we have a robust pipeline of deals we're looking at right now, and lots of institutional capital looking to deploy into this sector. And I think there'll be other folks that come in here, kind of do similar things to SANTÉ Realty by providing a method of utilizing ground leases for more efficient capital, and that will continue to grow, which is great for everybody in this ecosystem. And so we're excited to be part of it.
Yeah. So you mentioned the inflation and just the change that we saw in 2022. So as we hear about that, we hear it all over the news, right? And we're faced with it. So inflation at an all-time high. How do ground leases really protect our investors?
Yeah, even last week, we'd kind of taken a view working with economists, et cetera, in January of 23 that most of the inflation had been addressed and it kind of started to stabilize. And yet inflation numbers came out in February of 0.7% month over month, which is, if you annualize that and multiply it by 12, it's a really big inflation number. And so maybe all of the inflation isn't behind us. And so one of the things that certain sectors of real estate do really well is their inflation protection investments. So for example, if you own an apartment and someone moves out, the next person moves in, you bump that rent up in line with inflation. And so by raising that rent, you're continuing to capture inflation adjustments. Same with hotels, same with mobile home parks, lesser extent retail and office and industrial, but over time they all kind of catch up with inflation. And you're right, we haven't seen significant inflation for decades until post-COVID or even in the middle of COVID. And so our leases on the ground leases are inflation adjusted. And so if inflation goes up a bump, then the rent goes up a bump. That, therefore, at the end of the day, like all inflation passes along to the consumer, whether it's, again, multifamily, hotel, hospitality, retail, that's going to end up getting passed through to the consumer, which is kind of how inflation is calculated. But from an investment perspective, real estate is a natural hedge of inflation. And so it, in ground leases, works exactly that way, assuming the ground leases are structured properly. And I think a lot of our competitive set in this ecosystem are structuring to have those inflation protections in them. And that helps keep that capital efficient so they don't have to overcharge in a year where there's low inflation to make up for years where they can't charge inflation because the lease doesn't let them. We just typically go lockstep with the overall economy.
That's great. Oh, so what other macroeconomic variables are we looking at? What are we watching out for, either with our potential investments that are either in the acquisition phase or in the as we're sourcing properties, but then also with our current portfolio? What else are we watching for?
Yeah, there's kind of a macro view and a micro view as I get updates from our acquisition team and our capital markets teams. So on the macro view, we're looking at, what's the cost of debt? So everyone's using debt, which correlates down to Fed funds rates in the United States, or SOFR, which is the replacement for the old LIBOR. And so we're definitely tracking the Fed movements, the Fed's meeting minutes, where the investment banks are seeing the Fed going, as that correlates to the cost of capital on the debt side. And it does have a correlation with the equity side, because if you can get more return for debt, then you don't take the equity risk. And so there's a natural correlation there. So we're always watching that, and that changes how people buy real estate, whether they want to buy the hotel that's trading, or do they want to invest in the new development of a retail center, et cetera. So macro figures are very important, and that has a little bit of influence from taxation and immigration. There's some pretty big trends that we want to look at. And then on a micro level, real estate is location, location, location. And so if we're looking at real estate, it's still all about the submarket. You can say Phoenix is great, but I can go point you to a bunch of neighborhoods you don't want to invest in because they're deteriorating, or they're anti-growth in that neighborhood. And so people are moving to other neighborhoods. And so you've still got to be very aware of the realities of the submarket. And so, for example, if we find an opportunity where we can create a ground lease, we're going to go out there, we're going to look at it, we're going to talk to people there, we're going to do, drone flyovers of looking at things, but we're going to take vehicle per day trends, we're going to take demographic trends, we're going to take occupancy trends, we're going to take economic trends, We're going to take sales tax records. We're going to really dig into that submarket because ground leases, as you know, are multi-decades long. When we create them, they're 99 years long. So you certainly don't want to be going into something that's deteriorating, at least in the foreseeable future. And so on the macro level, it's important, but the micro level, I would say, is more important when you're actually making a specific investment.
Yeah, thank you. And I know that all too well, sitting in my position as we're looking at the operations of these properties, even as we're acquiring to then bifurcate into a ground lease, or if we're buying them as a pure ground lease from the start. It's incredibly important for us to cross all those T's and dot all those I's to make sure this is that long-term security that we have intended for it to be.
Exactly.
Which, it gets complicated in a post-COVID world. I think more complicated than we had ever seen it, but it's also pretty exciting to know there's just a tremendous amount of opportunity as we have moved into the ground lease world.
And I think people that invest in buildings, to your point, Anessa, if you invest in multifamily, that's what you do. You know it. You know how to have that sense of community with the residents. You know to handle the rent. You know how to get efficient costs for all your vendors. But do you really care what's underneath the ground of the building? As long as it's not moving, you really don't. And so to be able to separate that ground underneath that building and bring it to a lower cost of capital for the person that wants to run and operate multifamily, it is really one of the best benefits of our job. Is we're creating more efficient market, and it's really a win-win-win. It's a win for the owner of that building. It's a win for the capital that wants to allocate to the ground. It's actually a win for the tenants because the overall cost is cheaper, which means the landlord doesn't have to charge as much for rent. And so it's just a really great thing to have, making the capital more efficient. And I think it's going to continue to be that way as a more go-to solution for efficient capital going forward.
Yeah, thank you. We certainly have a great pipeline of opportunities that have come up in the, I think, second or third and fourth quarter of 2022, and it's incredibly thick here, first quarter of 2023. But being that it's now, mid Q1, what do you want to see by the end of this year? What are we going to see based on our outlook today?
Yeah, I think if you look at internal to our firm, we really see acquiring hundreds of millions of dollars of properties this year and bringing that efficiency of capital by bifurcating the building away from the land and bringing institutional capital to invest in the land, and those that want to operate the building types that they are having really more efficient purchasing price of those buildings. So, for example, we're acquiring 100% leased retail asset, really strong tenants, really long-term leases, and before we're even going to the closing table, we have people that want to buy the building without the land, and they'll simply, rent the land for 99 years, and they'll essentially get the building at a discount. And so I think we'll just continue to do that, where we will have a more and more robust platform. I see us adding more technology, which makes this more prolific out in the environment for other real estate investors to utilize the ground lease structure, and we'll continue to grow from there. And there's oftentimes in our niche of utilizing ground leases as part of the capital structure, we also refer people to other, would-be competitors because we may not focus in a specific market, or we may not focus on a specific development deal or a value add deal at SANTÉ Realty, but other funds do that. And so we refer investors of real estate over to those other funds. So I think this is a huge growth sector, whether you're someone like us who's kind of providing the platform, or you're an institution providing capital on the senior secured ground leases, or you're an investor doing development, or you're buying value add properties, or you're buying stabilized properties. It's just a really growth opportunity, and it's probably one of the few growth opportunities that people are really doubling down on in early 2023, and we're excited to be part of it.
Yeah, thank you. And one thing you mentioned there are would-be competitors that, we're really eager and willing to collaborate with them when we see them, that they actually are just another opportunity to connect and share, and that really kind of hits home to what our core values of the team for us are. It really is less about, if I were to take it away, it's less about saying, oh, I need my piece of the pie. There really is a pie shop out there.
Yep.
And all of us, as we continue to work together and we're looking to acquire properties, there's just a tremendous amount of opportunity to even grow and learn alongside all of these other same type vehicles that could be competitors, but truly we're all moving forward and we're all able to succeed off of it and grow. Thank you for that, Jim. I don't have any additional questions for you today, unless you wanted to share any additional insight. But quite honestly, I'm just grateful for everyone to log in and give us a listen and catch up where we're at. I also see 2023 as a really successful year, and considering what's in the pipeline, we know we will hit that target. Thanks again, Jim.
Thank you.